Hi there. So it's been a couple of weeks. Today's March 26th, and I've been reviewing the market action the last couple of weeks, which was not what we expected. The odds of March tended to be really bullish instead of bearish. But given the market doesn't always do what you want, we want to know what to do now and where we're at and what the bigger picture is and what's the near term and what are the parameters you want to look for in terms of going forward. Okay, the way we see it now is that the rally that started on March 15th and had continued until Friday is probably going to continue further. And therefore, those people who are short, particularly short options, you want to find a way to exit. There's a very good chance short term, this week coming up, the 28th, 29th, there's a very good chance the market will fall down a couple days. And we're going to use that as an opportunity to lighten up on our short positions temporarily, okay? If you're not leveraged and you want to hold through a longer period of time, there's probably a high coming in around April 7th or 8th or 11th. You know, the 7th is a Thursday, the 8th is Friday, and the 11th is that Monday next week. And I think that high will be worthy of reshorting the market again, where it probably will fall down until the late part of April, possibly into as late as May 11th. So there is continuation potential on the downside, but in the short term, the risk is quite high that the market will continue higher after a few more days of possible pullback, in which case, if you want to exit, if you have a losing position or whatever, it's better to take a loss than to have a bigger loss later if it does go up higher. So that would be our recommendation, is to be concerned about this rally possibly continuing. However, in the second half of April, there's a good chance that the market will fall pretty hard and it'll start to regain its momentum on the downside. Okay, what about the big picture? Are we still in a bear market, or is the market going to crash and such? The probabilities have shifted with that rally reversing and the short-term cycles actually inverting. The probabilities are that the market is going to try to work its way higher, possibly until early June. And then the month of June could be a very nasty down month, again, possibly taking out the lows of February 24th. And there's a very good chance that later this year, there will be another opportunity where the market is very, very, very bearish, and we could have a couple of month crash type pattern again, but it wouldn't start until like late August. Okay, so June could be a bad month. The second half of April could be fairly bearish, and August through the end of the year could show to be extremely bearish as well, possibly more so, filling out the full 30-40% decline that we were expecting earlier in the year. This can happen, by the way. We're still very confident that January was the beginning of a bear market. That bear market is going to continue for some time, minimally until the end of 2022. There's been a very clear 20.16-year cycle over the last 100 years. In 1922, April of 1942, 2 months later, June of 1962, 2 months later, August of 1982, 2 months later, October 10th of 2002, and this year it should come out around December 10th of 2022. The reliability of that cycle is something you don't want to ignore. However, the market has a way of doing things where very few people are expecting it to happen the way it does happen. And I would just think that now, one of the better matches actually in terms of pattern, not in terms of price, is the 1929 crash actually. The market that's the highest on the list in terms of the best match. Of course, that was a 50% break, and we had a 13% break at this point. But what it did do is a 5-month rally, most of the way back, but not all the way back to the highs of 1929. And then it had a bear market from 1930, middle of 1930 until July of 1932. So that's probably what's happening. The market's not just going to go right back down, take out the lows and keep going. It might retest the lows in June or maybe take them out slightly. But most likely the biggest decline will be later in the year. And if you're looking for it right now, you're not probably going to get it. So be careful with that. I don't know that buying the market is a good idea because there's enough vulnerability, there's enough downward pressure over the next few months that being long isn't going to work either. You just have to be very patient with this market and try to avoid large losses. You may be able to enter several different times. April 7th is one possible date to go short. June 6th shows up as another possible date to go short. August 29th cyclically comes out as another possibly very significant high point prior to a very large decline. So there were 2 or 3 places in the next 5 months where you can still enter a short position or exit any long positions that you might have. The indexes are going to be hard to make money in. The individual stocks can still make money on the upside, but you'd have to be an excellent stock picker. And unless you are, you're probably going to pick the wrong stocks to go with because the high flyers are probably the worst ones to do now. You have to have a new crop of stocks, a new group that haven't performed until recently. Maybe they have additional reasons to go up in a bear market. There are counter-cyclical equities out there. All right, on that note, so be careful. The numbers that are important on the S&P, 4607 turns out to be an important resistance level, which if it breaks above that is an issue. And 4460 is also a support level that if it breaks below that, there's a good chance we'll see lower prices. And when I say breaks below, I mean close above or close below more than for 5 minutes, like on a daily basis, on a daily close. It would be more meaningful. It can break it for a few minutes and then come back on the other side of the line. Alrighty? That's our update. I want you to realize also that our 1 week trading system has performed extremely well throughout this whole thing, better than we did, better than I did. And it's had 5 trades since we started broadcasting the signals. The first 3 were winners, the 4th one was a loser, and the 5th one is winning at the moment. You might consider looking into that because it's easy. We just send you a new signal once a week and update it the day before it happens, and it makes life simpler. All right. Thanks a lot.